Hello, and a very warm welcome to the Property and Investor Podcast. This is the podcast where I speak to some of the most interesting people, resilient people, and inspiring people in property investing and beyond. I am, of course, your host, Paul Lanfear, and my inner lawyer needs to tell you the usual health warning. Nothing in this podcast is financial, health, or legal advice. Obviously, please seek your own professional help. Today's guest is a genuine delight. I introduce today's guest is Mr. Dominic Frisby. Now, if you go onto LinkedIn, the introduction you're given to Mr. Dominic Frisby is a financial columnist with Moneyweek, author of various books, TV presenter, and also comedy voices. And in his words, an unlikely combination, but it works. And he sends us to his website, dominicfrisby.com. Dominic, welcome to the podcast.
Thank you very much, Paul. I'd forgotten I'd even written that introduction on LinkedIn. I haven't updated it for ages, but anyway, thanks for reminding me. I need to.
Do you know what? I think it could definitely do with updating, because in preparation for this podcast, Dominic, I've learned a new word. It's a word that you'll no doubt be familiar with. But I've learned a new word. The new word is polymath, which is a Greek word that means an individual whose knowledge spans a substantial number of subjects, known to draw on complex bodies of knowledge to solve specific problems. What do you make of that as a description of you, Dominic? Do you take the compliment or not?
Well, it sounds very grand, but you could just say jack of all trades, really, master of none.
Well, we shall see about this. Look. Huge thank you for coming onto the podcast. Obviously, I've enjoyed all of your books. Not only are they fabulously researched, fabulously written, enormously interesting, but beautifully read. So, I'm not the greatest reader of books in the hard copy, so I listen to everything on Audible. And absolutely beautifully read books. A couple of times a year, I start a book and I have to immediately stop after the introduction. Not with yours. Absolutely fantastic, and we're going to get into all of that in due course.
Yeah, I'm really pleased you said that, because of all the things I do, the thing I've done for the longest is voiceovers, and I've been doing them since the day I left university, but I used to work on reading when I was a teenager with my dad. My dad was an actor, and he'd get a Shakespeare script out or something, and we'd read it, or a poem, and we'd read it, and we'd argue which words to stress, and we'd work on my diction and all that kind of thing, and the production of my voice. And I used to get wound up at school. This is even before I started doing this with my dad, when other kids in my class would be asked to read aloud, usually in English, and they read it badly. And so I've always attached great importance to not only to voice and speech, but to the spoken word. And generally speaking, I'm very excited about this boom that's taking place in audio generally, because the only reason we invented writing was to transfer information over distance and over time. In other words, to transfer information in a way that wasn't possible with the spoken word. And the human mind is actually more geared to absorb information through the ear than it is through the written word. We absorb it more naturally, and that explains why explains that this huge boom in podcast and audio and audiobooks and all the rest of it that's taking place. And I think as a species we're going to develop incredibly as a result, because I came to financial markets in the noughties knowing nothing about them. And the way I educated myself was by listening to podcasts. And I know hundreds of thousands, millions of people are doing the same thing, probably even billions of people. And so there's this enormous self-education thing that's going on, made possible by the internet and all the information that's on it. But it all boils down to that essential thing, the spoken word, and how well the brain absorbs information through the ear. It absorbs words better through the ear than it does through the page. For the most part, there are some people that, are very good readers, and but I know people who, I shared a flat with Simon Evans, a comedian in Edinburgh, several years running at the Edinburgh Festival, and Simon listens to audiobooks on double speed all day long, and he, forget Stephen Fry, Simon Evans is about the most well-read person I know, and it's all because of this audio. And yet, amongst all of this, reading, people reading aloud, there's a lot of guys who do it very well, but there's a lot of guys who really don't.
Yeah.
And, they've got bad speech, or they've got bad vocal production, and so I still think there's a lot of room for improvements in the speaking of the spoken word.
Got you. Okay. Well, I'm certainly with you on that. And, Simon Evans once made this really interesting point. He's obviously a very sharp guy. You know much more better than I. He made this really interesting point in a long time ago. We'll get perhaps on to speak about energy later. And he made, in one of his productions, he made the point, and I'm paraphrasing, and I'm obviously going to get this wrong, but he basically said, if you're all up in arms about raising, energy prices going up, why don't you just buy some shares in an energy company and hedge it? Why don't you? Which was, I thought, quite an entertaining way of approaching it. So
yeah, he did say that.
Dominic, if we can start at the beginning with you, if you don't mind. Now, particularly I want to start with you is when you come across financial columnists and commentators, you always think, oh, well, they must have done economics at university. They must be coming, they had a first career in a bank. You arrived here by a very interesting route. I mean, I discovered your work through Moneyweek. How did you get to Moneyweek? How did you get to where you are now?
Well, it was a long and circuitous route, however you pronounce it. So I did Italian and drama at university, and then I went to drama school. But the reason I went to drama school was not so much to become an actor, but because I wanted to become a writer. And most of the actors, the best writers, seem to have started out as actors: Shakespeare, Charles Dickens, many others besides. I think Dickens started out as an actor. But anyway, certainly the greatest dramatists started out as actors, and my dad was a dramatist, and so I had this idea that I wanted to be a writer. And then, but because of all this work I'd done on the spoken word with my dad in drama school, for some reason I was the best at radio, and so I got a voiceover agent very quickly after leaving drama school, and they just got me voiceover work, and so I've always had voiceover work, and this is going back to when I was 21, early 90s. And then voiceover works, it's quite well paid, so even though I was an unknown, I was, in terms of earnings, I was doing all right. And then, but voiceovers tend to be an hour here or a few hours there. It's never a 9 to 5 every day, so you have time on your hands. And I wrote this comedy song, and a friend of mine from university had become a music producer, and I said to him, I've got this comedy song, I'd like to try and do a Christmas novelty single with it. Back in the 90s this was, and he said I'd go and do it at my brother's club. And so I went and performed it, and I didn't know, but his brother was a legend in comedy by the name of Malcolm Hardy. And the way it worked, you went and did an open spot at Malcolm Hardy's club, and if you did well, you got a half spot and then a paid spot. And I did well, and I got a half spot and a paid spot. And suddenly I was a stand-up comedian, but it was just performing this comic song. I've always had a love of comic songs and rhyme. Mm-hmm. And anyway, and so I was a comedian for many years, and I would say moderately successful. I earned a living doing it. I never got on the telly, but I worked on the circuit pretty much as I wanted to work. And by the mid-noughties, my dad and there was two things going. One is I'd made a bit of money, and two, my dad had this project and my dad had a bit of money that he was looking to invest, and I had some money, and we had this project, which was a radio play that he'd written called Kisses on a Postcard, about his time as an evacuee in World War II, that we wanted to turn into a stage musical, or we turned it into a stage musical. We wanted to raise the money to bring it into the West End, but it was an extraordinary amount of money to progress this thing, like 3 or 5 million quid or something, which neither of us had. And I heard all these people talking on the internet about gold. And as we were looking around to invest this money, and I was saying, this is in the mid-noughties, and I was like, I think we want to be in gold and commodities, Dad. And we went to talk to a couple of fund managers, and I didn't really like what they had to say. And I was listening to more and more of these interesting people. And as you start to learn about gold and how money's created, I finally understood something I'd never been able to understand, which is why houses in London cost so much money. But it's, and that was a big moment of clarity for me. So I started a podcast as a means to talk to all these interesting people without having to pay them for their time. Beauty is with a podcast is everyone is promoting their brand. And the podcast was sort of moderately successful. It was like the number one financial podcast for a bit in the UK. I don't really do it anymore. Well, I do, but not in the way that I did. But that's another story. But I found that, the first person I interviewed on the podcast was Jim Rogers, billionaire partner to George Soros.
One of the greatest investors of all time.
Yeah. And it was like, Jim Rogers wants to promote his book and he's happy to do your podcast to promote his book. And I was like, wow, this is Jim Rogers, even though I've heard of him. And then the next guy I interviewed was James Turk, who's a big legend in the gold. And then maybe the third or fourth guy, David Morgan, a big silver guy. And then Jim Dines was a uranium newsletter writer. I think he might be dead, Jim Dines, but he was a legend in newsletter writers at the time. And we actually broke. Well, we did this uranium podcast that lasted 3 hours. So I submitted it to the Guinness Book of Records to be the longest ever radio show recorded about uranium. And they declared that there was no such category. So it never got, but I'm sure it would have been, if such a category existed, the longest ever thing. And I discovered that people were happy to listen to longer form stuff. And so I got caught up in this whole podcast boom that we were talking up about. But one of the people that I interviewed was a lady called Merrin Somerset Webb, who was at the time the editor of Moneyweek. And she now writes for Bloomberg. I think she still writes for the FT. And she said, we need people like you to come and write for us for Moneyweek. Do you want to come and write for us? And so that's how I got started writing for Moneyweek. And in fact, my column was popular because I had the discipline of a comedian, which is always to write stuff in intelligible language, because as a comedian, if they don't understand you, you don't laugh. But in finance, people tend to be a bit more circumspect. They use financial jargon and it's quite alienating to ordinary people. So my column was very popular. Also, I was writing about gold, which was in a bull market, so the stuff I was saying was proving right. It was going up. So for all these reasons, so that's how I got started. It's all really quite accidental, but it was because of podcasting, but also because I was trying to find out how to raise the money, to earn the money, to put on this musical. So that's how it all happened.
That all makes complete sense. So, not necessarily the most traditional way into financial journalism. We are going to touch upon the project that you mentioned in relation to your late father, which is an absolutely fantastic project. Can
I just say, Paul, if I submitted my CV, sent an email or put up my LinkedIn profile, I'm looking to become a financial writer. I've been a stand-up comedian for 15 years. And also I do a lot of voiceovers.
Yeah.
I'd never have got my foot through the door. And it's because of podcasting and the people you meet and the networks you build up and all that it was able to happen. So that's, there's no substitute for networks and meeting people, and having a podcast is a very good excuse. And in a half-hour podcast you do with somebody, it's like a heightened meeting. You'll just get through so much more stuff than you would if it was just a normal meeting. So, when you have meetings, it's almost just good to go, well, look, forget the meeting. Let's just do a podcast, because you'll get through a lot more. Anyway, that's all of that. Carry on. Sorry to interrupt you.
No, it's absolutely perfect. I'm glad you raised uranium. We might touch upon that just as we get towards the end of the podcast. So a 3-hour podcast on uranium, sadly not dedicated as a world record. Perhaps they need to change the rules on that. We shall see. So
I'm not bitter.
So this series of podcasts, here we are, the beginning of the new year, 2023. The theme of these series of podcasts, certainly in the first quarter, is called like a macro view and our forecast for the year ahead. And you actually have quite a reputation for providing predictions. But before we get into your predictions, do you know what would be really lovely is if we could just take a snapshot of where we are now in terms of, world economy, UK economy. Obviously, last year, 2022, only speaking for myself, was absolutely full of surprises. New prime minister every 5 minutes, a war in mainland Europe, energy, interest rates, inflation going through the roof. And I feel like you're the right person to ask about this, because you've been writing articles and commentaries on inflation for as long as I've been reading your work. So give us the Dominic Frisby state of the nation. Where do you think we're at as an economy? What's your take on things? And then perhaps we'll go from there into some of your predictions.
Absolutely fine, Paul. Just pause for 1 second, if we may. So these are very difficult markets. That's the first thing I'd observe. I have been talking about inflation for years, and the problem with inflation, it's a bit like, I don't know, it's one of those words, it hasn't been properly defined, so it means different things to different people. But we've been seeing like runaway inflation in house prices since the 1970s. And the reason for that is money creation. Money gets created every time you issue debt. New money gets created, and because of mortgages and the money that gets created through debt, we've had runaway house price inflation, 10-15% average house price growth for forever. But that's not on inflation, official inflation numbers. So, because they don't include house prices. Now, in the old days, if you look at a 1950s definition of inflation, it would be the increase of the money supply, or the increase of the supply of money and credit with the consequence of higher prices. Now, it's just the higher prices of a certain basket of goods. Now, if you look at where new money supply goes, only about 13% of it, I think, is the positive money figure, actually goes into the goods and services that are in CPI, the official measure of inflation. So only 87% of money supply growth goes unmeasured, and that's before the money supply that gets created through quantitative easing. Before, so and in fact, those 13% of goods, household goods and services that are measured in CPI are prone to the deflationary forces of globalization, increased productivity, improved efficiency, China exporting its cheap labor, all that stuff. And so real inflation has been concealed for years, in my view, and it's a big fraud that's been perpetrated by governments that want to keep asset prices inflated in order to get re-elected. Now, but what suddenly happened in the last 2 or 3 years, because of COVID supply chains, deglobalization, China locking down, the war in Ukraine, all the rest of it, is that suddenly there was even inflation in the things that had previously where they'd been able to hide it. And now I think I just read a thing, even Aldi and Lidl, the two cheapest supermarket chains, their prices are up 20% year on year. Well, the government says inflation is 10%. But Aldi and Lidl, which are the cheap ones, is up 20%.
Yeah. And
I just go in, I've got a co-op at the end of my road, so I do most of my shopping there. You used to be able to buy 3 steaks for £7. Now it's 3 steaks for £10. Well, that's 50% inflation, isn't it?
Yeah.
Give or take. So, inflation is much higher than it's been stated. But I'm careful about using the word because it's so misleading. In any case, so what was extraordinary about last year is that normally if equity markets were doing badly, you could hide in bonds. But that wasn't possible because the bond markets went down as well. So you literally had to be sitting in cash, ideally the US dollar. But in an inflationary environment, the one thing you don't want to be sitting on is cash.
Yeah.
So, what's going on? Really, really confusing. So, that's all going on. Broadly speaking, now you mentioned my predictions. I do these predictions at the beginning of each year, more for entertainment than anything else. And as you know, if you do these predictions, then you walk away and then you come back and look at them in a year's time. Usually over the course of a year, so much has happened that's way off where things were when you originally made those predictions. There's just stuff that you will have got wildly wrong. And, you know, for example, last year, when I made my predictions, I didn't know that Vladimir Putin was going to invade Ukraine. So that's sort of changed. The world circumstances changed a little bit with that. So, sorry, I'll turn this people. I'm on a WhatsApp chat group, and people.
I think you can be forgiven for not foretelling that Vladimir Putin would you know, arrive on a certain date in mainland Europe. No, I think you can be forgiven for that.
But broadly speaking, I think there are several dynamics we're going to see. So, in the 1970s, people would invest for yield rather than capital growth.
Mm-hmm.
And so, you know, you'd buy a whatever that yield, a bond or a stock that yields 10%, say, and you wouldn't be worried if it went up or down in value by 5 or 10%. That completely disappeared this century.
Mm-hmm.
With, you know, the runaway equity since the dot-com crash. Equity markets have basically gone up, with one blip in 2008 and another blip in whenever the taper tantrum was, 2013, and then of course COVID, and then of course last year. But so it was the tech stocks that did the best, not which don't yield anything.
Mm-hmm.
Particularly after COVID, you know, everyone was using tech much more with the lockdown, and most of the normal companies in the physical economy slashed their dividends or didn't pay the dividends. So that made the tech stocks even more attractive. And I think what we saw in 2020, 2021 was the final blow off top in tech.
Okay.
That said, there's a scalability to tech that doesn't exist in the physical economy. So, for example, if I invent, you know, I've got here a popper stopper for my microphone, which now demand for microphone popper stoppers is, you know, bound to go up because of the audio boom and because everyone needs a good microphone at home and they want to stop their popping on their P's. So there's a much bigger market for popper stoppers than there was. But at the same time, I've got to manufacture and distribute all these popper stoppers. And, you know, there are other companies doing popper stoppers that've got some clever widget that stops the pop better than this, you know, so there's a lot of competition. Mm-hmm. But the main problem is that the manufacture and distribution. Whereas let's just say I designed an app that can run through your Zoom application that stops pops.
Mm-hmm.
I only need to upload that app once to the App Store and it can be downloaded 1 billion times if necessary. Yeah. So there's a scalability to tech that there isn't to the physical economy, if that makes sense. And that scalability is one of the reasons why tech or the digital economy, I should say, has so dramatically outperformed the physical economy over the last however many years, 30 or 40 years. So even though we've seen something of a blow off top in tech, you know, the tech still has that scalability. And so, for example, I've got a Substack newsletter and I'm reading Substack, and I'm now finding myself, the Substack app is the first app I go to on my phone now ahead of one of the newspaper apps. If I'm just on the train, I just want to read a couple of articles, I'll go to Substack ahead of, say, the Telegraph or whatever it is. Mm-hmm. So if there was an opportunity to come and invest in Substack, I would take it because I just think it's brilliant. So what am I saying with that is, if you look at the top 10 companies in the world by market cap at the beginning of each decade, mm-hmm. You know, in the 90s, at the beginning of the 90s, it was all Japanese stuff. In the noughties, it was all .com stuff. By 2010, it was all natural resource stuff. 2020, mm-hmm. It was all tech stuff. Well, what's it going to be in 2030? There might be a couple of tech stocks in there, but it's probably going to be something else. And so I've got mixed feelings about tech. I'm not as bearish about it as some, but the other thing is if you look up, you know, in 1980, say, I don't know the exact number, but a large part of the S&P 500 would be natural resource companies, oil and energy. Now, mm-hmm. I think energy makes up like 2 or 3% of the S&P. Mm-hmm. And it's, you know, loads of pensions won't own oil stocks because ESG and whatever. Whereas they all own Google and Microsoft and Amazon and so on. Now, so that leaves less upside for people to buy into it because they already own it. Whereas let's say there's a reallocation, like we've got to own more energy, and the anti-fossil fuel narrative changes slightly, and the climate change argument seems to be falling apart a bit at the moment, and so I think energy is a good place to be. Obviously had a bonanza year last year, and the metals lost way, but particularly with China opening up, I think you want to have an allocation to oil and gas and coal. Might be renewable gas, for example, but you want to have an allocation there. The gas prices actually come off a bit. You want to have an...
Can we just hover over the tech just for a second longer?
Yeah, sure.
When I started attending kind of investment conferences, listening to the great and the good and all the rest of it, one, very good piece of advice I think for mere mortals is don't necessarily try and be a stock picker unless you're willing to kind of invest the hard yards in discovering, a unique edge or what have you. I know in your Substack that you deal very ably with that, and people can discover that in your Substack for themselves. But when I started attending investment conferences, one of the cases what I found really compelling, and I'm interested to know whether the wheels have fallen off this cart, is look at like something like the Scottish Mortgage Investment Trust. These people are great at picking technology stocks, and that forever we're going to be on this upward march in terms of innovation. We're not going to go back to living in caves. Innovation will march onwards. Have the wheels fallen out off the innovation cart? Is there no more legs in that market at all?
No, there are plenty of legs in it, right. And that's why I say that I don't think the wheels have completely fallen off tech. And if you can find opportunities in tech, you should go for them, because new technology is how we progress. But I think to expect a repeat of what we saw between, say, 2011 and 2021 is unlikely. I think the 90s were a great era for tech, and the tweenies were, or whatever they're called, that 2011 to 21 was a great era for tech. 2000 to 2010 wasn't a great era for tech. So it might be, but Google, when was Google didn't even exist, I don't think, in 2000, or barely.
Yeah.
And Facebook didn't.
Yeah.
So, there are still massive opportunities, and I think you should have some allocation to tech, but big tech, I think, still has a few problems. So that's why I said, if I could invest in Substack, I would. At the moment, it's still private, but presumably they're going to go public at some point. I think Twitter's really good now. Elon Musk has bought it. So if I can invest in Twitter, I would.
Do you think you'll take that public again at some point?
Maybe. It would be good if he took it public at a much higher price than he bought it for. He must be thinking about it.
No doubt that somewhere in his thinkings about it. Anyway, I apologize. I interrupted.
It's okay. You. So I'm not as bearish about tech as some, but I'm just, and you're absolutely right. You have to, I think you have to have an allocation to, it might be that biotech, for example, like that didn't really see much of a bull market. It might be biotech's time has come, or if there was some, drilling technology for oil and mining, maybe that. Yeah. So it's stupid to just dismiss tech. But I think when you say tech, you're thinking about things like Microsoft and Amazon and Google and so on, and the NASDAQ. And the wheels have come off a bit, but I don't think it's the end, as some people are declaring.
Very good. Well, before I interrupt you, you were taking us into the energy piece, and I'm interested in your views on that, because obviously we are going to have to, energy is part of life, isn't it? And we need energy in order to progress. interested in your views in energy. A particular thing that causes bafflement for me, and feel free to pass over this if this is of no interest to you, is this apparent dislocation between the spot price of natural gas and where we are as a country in terms of, seeing 3 to 5x energy prices. I mean, I just had a glance over the spot price of nat gas in preparation for this. I don't know if you've looked at the chart recently, but it's a bloodbath. It's all red, and it has been for the last couple of months. So, welcome your views on that, or the generally, or energy generally, Dominic.
I'm not sure about this, Paul. So I say this with a certain amount of hesitation, but I think the natural gas price that you would trade is natural gas prices in North America. And what natural gas trades for in North America isn't necessarily what it trades for in Europe.
Got you.
Also, what you pay for in your heating at home, there's quite a long lag between that and what it's actually trading for in the wholesale markets. So that's another factor. It's also, I know this for a fact with oil, like 75% of the price you pay for oil at the pump is tax.
Yeah.
So only 25% of the petrol price is actually determined by what the oil price is trading for. Everyone's got to make their margins. The way gas is supplied to homes in the UK, there's probably not enough competition. It's not a totally free market. It's a very regulated market, and there's maybe 4 or 5 gas suppliers that there's a high cost of regulation. And there's probably a bit of cartelly stuff going on between them. And there's a lot of, it's not quite a nationalized industry, but it's inherited from a nationalized industry. So there's lots of inbred inefficiencies there. So all of that conspires, I think. But the main concern, and it's just nuts, because we could supply our own natural gas and be an exporter. We could have a surplus, and yet because of the environmentalists, we import it all, which is actually more environmentally unfriendly, because you've got to pay all the transportation costs. Like, we import natural gas from North America where they frack it. So the fracking's still happening, just happening out of sight. It's really hypocritical.
Is that what we call the exportation of pollution by getting our manufacturing done in other parts of the country and other parts of the world and pretending it's not us?
But it's still doing just as much damage to the climate or to the environment.
I recently had the most extraordinary time in Norway. I don't know if you've ever been to Norway.
Once.
Absolutely beautiful country.
Stunning.
And the infrastructure is absolutely mind-bending. Certainly compared to probably what we're used to. Absolutely phenomenal bridges, roads, everything. They've spent millions on public toilets. And when you speak to the people out there and say, how did this happen? Like, this is extraordinary. You should see what the UK looks like. And they say, we've got lots of natural resources. We capitalized on our natural resources. We're a very well funded country. So other countries have obviously maximized the kind of return on their own resources, perhaps in the way that we haven't at this stage. But who knows what the future holds?
Well, I think Norway, with those Scandinavian countries, firstly, their populations are much smaller. And so countries with smaller populations tend to be more efficient, particularly the state bodies, just because they're smaller. So, the Norwegian health service only has to deal with 4 or 5 million people, whereas the UK health service has to deal with 65 million. So there's just, and there's a rule, the smaller the organization, the more efficient.
Right.
So there's just the inefficiencies of scale. So that's one reason. I think another thing with the Scandinavian countries, and it should apply to Britain, but it doesn't seem to, is that there's an attitude of you need to prepare for the winter, because if you don't, you die. So there's an attitude of preparation and putting stuff aside and getting stuff ready that maybe that doesn't exist in hotter countries, which don't have the same pressure.
Yeah.
You've got to get your shit ready by mid to late October, otherwise you die.
Mm-hmm.
And because the weather's much harder as well, there's probably a bit more of a spirit of community, communal spirit, helping each other out.
Yeah.
And so the other thing that those Scandinavian countries have is that much higher levels of tax are levied locally. So there's much more accountability to the taxpayer. Here in the UK, well in excess of 90% of tax is levied by central government, where the state is much less accountable. Whereas if taxes are levied locally, the guy who's supposed to be building the town hall, or the guy who's supposed to be collecting the bins, and you can go, hey John, you're supposed to collect the bins, I paid 100 quid last week and you haven't collected those bins. So there's just an accountability, and it's a much healthier relationship between taxpayer and tax recipient when their taxes are collected locally and the service is administered locally, than if it all goes into a central pot and then it's sent out. So that's just a structural thing. So, but for all those reasons, the mentality of the people, the weather, the size of the population, and the way that tax is collected, I think that's why. And also, and this is changing now, and forgive me if what I say is controversial, but until the last 10 or years or so, Scandinavian nations were much more monocultural than the UK is. And I mean, obviously it's changed with the massive influx of people that have gone there in the wake of the Syrian crisis and everything else, very large Muslim populations and so on. But I think welfare states tend to work better in monocultural societies than they do in multicultural societies.
Right.
That's not an argument against well, it is an argument against multiculturalism. There are lots of ways by which multiculturalism is better than monoculturalism, and that's not particularly a can of worms I want to open up. But generally, state welfare functions better in monocultural places, I think.
Right.
I stress I think. It's just a theory I've been thinking about. But I think that's another reason for, the success of the Scandinavian state generally. Although you talk to a lot of Scandinavians and they say it's not as good as everyone else says it is. So
really, well, maybe the grass is greener in that respect.
Yeah.
So we've covered off tech. We've covered off. We've touched on energy. Where do we go next in terms of your kind of predictions for the year ahead?
I think just general themes. Yield is going to be a lot more attractive than growth.
Yeah.
You should have an allocation to energy. I think commodities will do well. There's just particularly metals and energy. There's been 10 years of underinvestment, 15 years of underinvestment, and China's opening up again.
Yeah.
So increased demand, no supply. What else do I like? I always like the anti-state investments, which are gold and Bitcoin. For ethical reasons, I like them. I'm a small state guy, not a large state guy, and I don't like fiat money, and I think it's done horrible things to society. What else
let's pause for that. I mean, it's interesting. You've made two very interesting points there. Firstly, as to taxation, it is no coincidence that you have written a very, very interesting subject on the subject of taxation, daylight robbery. I recommend it to absolutely everybody. I mean, it is eye-opening. I don't want to steal the thunder of your book. I mean, people should go and read it for themselves. But I was surprised to read that income tax was a temporary measure. I would have thought that was a long-term plan, but apparently it was only intended for a few weeks, and it solved the bafflement that I've had when looking at an older building and wondering what on earth was going on with the windows and why all these windows were bricked up. Absolutely astonishing. Let's deal with one of those. So tell us this just in overview. What is the position with the introduction of income tax? What was apparently a temporary measure has become a long-term solution.
Yeah, well, um, uh, income tax was introduced to the UK in the Napoleonic Wars to raise extra money to pay for the war.
Mm-hmm.
And it's always the case, you go to war, taxes go up. And then when the war finishes, when the emergency finishes, taxes never go back to the level they were before the crisis started.
Mm-hmm.
It's just the most repeating pattern you'll ever see in history. And one of the things actually I argue in the book is that we need to look at the world through the prism of taxation. And when you look at history and you realize that the incredible impact of taxation on the course of human history. And, I can play a little game and I'll get you to name any event in history and I'll tell you the untold tax story behind that event, without which that event would have panned out in a very different way.
Yeah.
But let's just say taxation was outlawed.
Mm-hmm.
Well, then how do you pay for war?
Mm-hmm.
You couldn't. And so if you want to end war, end taxes.
Mm-hmm.
But then you end government, because taxation is how rulers fund themselves. And if they lose, whether it's king or it's emperor or it's government, if they lose their tax revenue, they lose their power. Mm-hmm. So tax is power. And you design a society by the way you tax it, how free the people are going to be or how subjugated, how much of their labor they're going to keep for themselves or how much is taken from them. The destiny of that country, whether it's going to be prosperous or poor, innovative or what's the word? Stagnating.
Mm-hmm.
But in the case of income tax, it was introduced in the Napoleonic Wars. And then after the wars, it was, I think in 1819, maybe, they abandoned it. And then, but we had a plethora of petty taxes, most of which were introduced by William Pitt. Mm-hmm. And, what's his name? What's the name of the prime minister who started the police force? Begins with an A. He was prime minister in the 1840s. Oh God, I can't remember his name. I beg your pardon.
No, people can research that for themselves.
Well, it was him who reintroduced income tax. It's so long since I've written the book. His name it'll come back to me. But one of the reasons he introduced income tax was he was able to abolish hundreds of petty taxes and mm-hmm. replace it with one simple income tax. Mm-hmm. So it was a dramatic simplification of the tax code. But it was only the highest earners that paid it. It didn't affect ordinary citizens. And then I'm afraid it was another war, World War I, and the tax worked. It was efficient. It levied a lot of taxes. And, once they had the revenue, governments, once they've got their revenue, then they very rarely go, oh, I don't want that revenue anymore, because it's effectively giving away your source of income. It's bad business to do that.
Yeah.
But anyway, income tax only came to every man with World War I. And then after World War I, it stayed because of the welfare that had to be paid for to make good the damage and the rebuilding effort. And then World War II came along, and we've just been stuck with it ever since. But when he originally introduced it, it was a temporary measure, and it's been permanent ever since. And the same thing happened to America. Attlee. I kept trying to say bloody. Oh no, sorry, no, not Attlee. No, what am I talking about? Not Attlee. Peel. Thank you. Robert Peel. I told you his name began with an A. Yeah. Anyway, and in the States, it only came in 1913. Mm-hmm. And again, it didn't affect every man. It did a bit in World War I, but the only time that it really hit every man was 1942 in the States, the Revenue Act of 1942. And again, it was to pay for the war. Mm-hmm. Irving Berlin was commissioned to write a song by the American IRS. Can you imagine HMRC commissioning Andrew Lloyd Webber to write a song or something? But anyway, that's what happened. But it contained the lyrics, 1,000 planes to bomb Berlin. They've got to be paid for, and I'll chip in. And that was was ever the link between tax and war so apparent. But anyway, that's why Americans had it. And like I say, once the emergency is passed, taxes never return to the level they were at before the crisis started.
Right. Well, look, I'm not going to make that one of your official predictions, but let's make sure that we put that in the footnotes. So if one day in the future we see HMRC on our televisions with a musical interlude encouraging us to pay our tax, we'll know that you predicted it, Dominic, before anybody else. Obviously, you've got your views on the state are very well expressed in Life After the State, and you just alluded to there your kind of anti-government investment position, so gold and Bitcoin. I'm keen to get your views on gold. You know, is this a new dawn for gold? We'll talk about that in a minute. I think probably worth just touching on the book Bitcoin: The Future of Money. So whilst Bitcoin appears in the title of that book, do you know what's really interesting about that book is that it's got a beautiful explanation of money in the first part of the book. And I think most people, if I'm honest, and I'm not saying this in any kind of pejorative way, don't really have a grasp of what money is, its history, its origins. And I think it's really beautifully explained in the book. It's that book that obviously when I have my breakfast meetings with sort of the property investor breakfast, Bitcoin comes up from time to time. There's normally a fairly animated conversation about it. So there's people who are very, very bullish. There's people who are very, very bearish. And there's people who think it's a terrible scam. And it's your book I point them to. Am I right in saying that that it's the first book ever written on Bitcoin, or is that taken
from a recognized publisher? Yeah.
Perfect. So there we go. What I think is particularly nice about that book is that it tells the history of it. You know, it tells the origin story of it in a way that I don't think is told really elsewhere. And it's a fascinating story in itself. So that, parking that just there for a moment, I am going to come back to your predictions on that in a moment. But let's hover over gold, because I first discovered your writings through Moneyweek articles on investments in gold. So come on then, give us your prediction then for gold this year. Where do we think that's going?
Well, thank you for those lovely comments about my book, and I'm glad that somebody appreciates it. Honestly, it's really nice to hear people say such nice things. And I like gold because it's an investment outside of the system. It's nobody else's liability. It's real money. It's tangible. You feel like it just feels like pure wealth when you hold it. But I often ask myself, you know, gold, people say gold was money for thousands of years, for 5,000 years. It was actually the very first metal human beings used, you know, Stone Age man. Before smelting and copper and the Bronze Age and all of that, we were adorning ourselves with little nuggets of gold that we would have found in riverbeds or whatever. We were giving them out as reward. We were using them in barter. So it was primitive money. And we've used it as money ever since. And we use it as money today. People buy gold as a store of wealth. Central banks still hold gold. You know, they hold assets in gold. I think central bank buying in the last 3 months has been at the highest it's ever been since the 1960s, I read. So, you know, people still use gold as money, certainly as a store of wealth. Maybe not to buy and sell goods. But then gold really hasn't been used to buy and sell stuff since we invented paper. Since the printing press, and we started using paper money instead. So that would be the 1700s. We had gold sovereigns that were the pound coin up until the First World War, but so we used them. But you know, a gold sovereign pound coin would be the equivalent of a £300 note today. It was a lot. So you wouldn't be used for everyday transactions, for which you tend to use silver, copper, and paper. So gold hasn't been a medium of exchange for a long time, but it has been a unit of account and it has been a store of wealth. But I like it as an investment because it's an easy investment to buy, hold, and forget about. And you can wake up in 10 years' time and you know that no matter what happens to the world, that gold will still have value. So I like it for that reason. It's kind of like an insurance and thing, but it is a dead investment. It doesn't pay a yield. It doesn't go anywhere. It doesn't do anything. And I understand all the arguments why people don't like it for that reason. But we have printed too much money and we have debased our currencies. And if you look at how much less house £100,000 buys you today than it did buy you 25 years ago. And the reason that so many people are attracted to property and to buy to let and all of that is it's been one of the only ways that ordinary people have been able to get exposure to the incredible money supply growth that's taken place. Or even, you just go and buy a load of houses, 10 grand each, and you pay 100 grand for the house 20 years ago, and you put 10 grand down and get a 90 grand mortgage. The house goes up to 110 grand. You've doubled your money. And that's the effects of leverage when it works in your favor. When it goes against you, it's a different story. But, but it's buy to let is pretty much the only means by which ordinary people have been able to get exposure to this incredible money supply growth that's taking place. So I just, there's a lot of people who are very critical of buy-to-let investors, but I'm just like, why shouldn't they? So I don't, and the whole people who moan about buy-to-let investors, well, they're not the cause of all of high house prices. They're a consequence of them. So you should blame the government and the system and the way money's created and all that. Anyway, so I like gold, and it's an investment outside the system, and I spend a lot of time, and I've probably done more work on this than anyone, looking at, apart from 2 or 3 others, looking at how much gold China really has. And at the moment, it says it has just under 2,000 tons compared to America's 8,000 tons. But China's the world's largest gold producer. It overtook South Africa in 2008, 2007 maybe, and it does not export its gold. It keeps it all. And more than 50% of Chinese gold mining is state-owned. Moreover, it has been buying gold mines around the world and importing that gold that it's mined. It is the world's biggest gold importer, not just from its own production, but from other production as well. So it's the world's biggest producer and it's the world's biggest importer. And if you look at all the gold that's entered China, and you can do it by looking at Chinese production, looking at geological records, looking at the imports through Hong Kong, you can't see the imports from Dubai and Switzerland and London. They're a bit, but you can estimate them based on the amount of gold that goes through the Shanghai Gold Exchange. And you look at all these numbers, you put them together, you realize that more than 30,000 tons of gold have made their way to China in the last 20 years. 30,000 tons. Now, remember, America is the biggest gold owner in the world. It only has 8,000 tons. China says it only has 2,000 tons, but 30,000 tons of gold have made their way to China. And are you telling me that more than 50% of that, are you telling me that 80, 90% of that has gone into private hands? It hasn't. You can expect 50, 60% of it has gone into state hands, which means that China's state gold holdings are 50, 60% of 30,000 tons, 15,000, 16,000 tons, something like that. In other words, they're twice what America's are. Now, the US doesn't have many foreign exchange. It's, the US dollar, they don't have foreign exchange holdings in the US. They just have the dollar. And if China were to come out and say, well, actually, we've got twice as much gold as you, it's tantamount to being a declaration of war, because everyone's going to suddenly go, oh, gold actually means something. Gold is money. Then that when you're trying to understand China, and I talk to people at great length, Chinese and friends who've lived there and so on, and you're trying to understand, what is China's ambition? What is Xi Jinping's ambition? It's for his people to be prosperous, for the economy to grow, yada, yada, yada. But the Chinese ultimate ambition is to be top dog. They're the most ambitious country in the world. They see their place in the global order on top of the world. It was the top country in the world for hundreds of years. in the Middle Ages. I narrated a documentary when China ruled the waves. It was the most prosperous and powerful country in the world for hundreds of years. And it wants to reclaim its rightful place at the top of the world. Now, doing that, it needs to have the global reserve currency. Now, there's never been a global reserve currency in history that did not start off backed by gold. They all ended up debasing themselves and not being backed by gold, as has happened with the US dollar, but they started out backed by gold. And there'll be people in China that understand the history of gold and all the rest of it, and the majority of people won't. But there will be people there that do. And now you've got this situation where you've got this sort of what's called the Shanghai Cooperation Organization, which is 40% of the world's land service. And it's every country in the world, from sort of China to the east, Russia to the north, India to the south, and maybe Iran to the west, or Turkey to the west maybe. And pretty much every country in between is part of that Shanghai Cooperation Organization. And most of them want to de-dollarize. They don't want to be dependent on the US dollar. Now, they trust the US dollar and they use it because they know it works and they know it's trustworthy and they know the banking system is sound. And, probably they trust the US dollar, a lot of those countries, more than they trust each other. But they want to de-dollarize. They don't want, when they're using the dollar and America can just confiscate their assets like it did to Russia, they're thinking to themselves, we need another money system. And this Russian guy, Sergei Glaziev, has been tasked with designing a new money system, and they all have their own thing. But ultimately, if they could just back a currency with gold and use that, it's just the best thing. Or they could back it with Bitcoin, and we can come to that, but they're unlikely to. Or part back it with gold or something. You just know that gold's going to have a role to play. And as particularly with the debasement of currency that's gone on in Europe and North America. So for all those reasons, I just think, as well as having an allocation to energy, you just have to have an allocation to gold. You're mad if you don't. And I would say 5% of your net worth in gold.
What's your view of gold's cousin silver then? I've seen some fantastic headline of your articles, largely often around disappointment around silver. So what's your view on silver?
Well, this was a big argument in history, is like gold and silver used to be money. And in fact, the word for money and silver is interchangeable in, I can't remember what it is, 100 different languages or something. But you think of plata in Spanish, argent in French, the words are interchangeable. But when the UK went on the gold standard, Isaac Newton, we went on the gold standard. We didn't go on the gold and silver standard. And then, this was the argument in The Wizard of Oz that was going on in America in the late 19th century. Originally in The Wizard of Oz, the Emerald City was obviously the dollar, and the Yellow Brick Road was the gold standard, and Dorothy had silver slippers. And it was all about, this big argument at the time of gold and silver, because America had the silver dollar. But eventually, with Bretton Woods and all the rest of it, it was gold, not silver. And you've never met a metal with as much potential as silver. It's used in everything, every phone, every computer, biocide. It's got health properties. It's got monetary properties. It's just got everything going for it. And geologically, there's 15 times as much silver in the Earth's crust as there is gold. So the silver price should be 15 times the gold price. Well, if the gold price should be 15 times the silver price. And so, but if that was the case, then the silver price would be, $150 or something. And it just isn't.
Yeah.
And, it just always lets you down. And people say it's manipulation. Well, maybe the price is manipulated. But in that case, why would you invest in a market that's manipulated and suppressed?
Yeah.
And just go grey waiting for the suppression to be found out? It's just not worth time. So I like silver. I own a bit. I recognize its enormous potential, but I also recognize that the probability is of silver disappointing much more than it is of silver rewarding you. So
there speaks the voice of experience by the sounds of it.
yeah, so that's my views on silver. And I know there are lots of passionate silver bugs out there, but I'm sorry, that's just I was one of you guys once upon a time.
And that's your view. Okay, Dominic. So what we're going to do is we're going to transition into the little the quick fire round, where I'm going to and you've touched on many of these as well, so I know that I know you'll have a view on them. Is I'm going to name you a asset, effectively priced in US dollars, and then you tell me in exactly 12 months from now, are you going to be over today's price or under today's price? So it's over or under. I don't need any more detail than that. So whilst I welcome your views, I don't need you to nail your colours to the mast of the price, but it's just over or under. So we'll have the US dollar as measured by the dollar index. So for those that aren't familiar with the dollar index, it's a composite index that a lot of it's made up of the euro and some other bits and pieces as well. So the dollar index, up or down from here, over or under from here?
Well, at the moment it's at 101. It's in a strong downtrend, but it's the first port of call in an emergency. But I'm going to say higher.
Higher, excellent.
Only a little bit.
US stocks as measured by the S&P 500.
Higher.
Gold.
Higher.
Oil.
Higher.
Bitcoin.
Higher.
We're all that bull market and everything. This is exciting. And then I'm going to throw in a couple of wild cards only because you've mentioned them. So let's have, to represent tech, let's have as the kind of denominator for that. Let's have Alphabet.
I'm going to say lower.
Okay, lower.
The reason I just think this chat GBT is going to hurt Google.
Right. Yeah. You did a very, very interesting article on your Substack. We'll point on that subject. We'll point people in that direction. And then finally, because you've mentioned it and we didn't get a 3-hour podcast on it, uranium. So I'm going to, unless you have got a strong objection, I'm going to, our benchmark here is going to be the Sprott Physical Uranium Trust. I will take Yellow Cake if you want a.
What price is Yellow Cake now?
Let's have a look. Do you know the ticker symbol for it?
No, I got it on my phone. I can look it up. Here, hang on a sec.
Oh.
Here
we go. Right, so Yellow Cake is at 395.4.
Oh, wow. It's gone up so much. It's doubled. A little bit higher.
Okay, so everything's in a bull market apart from US tech as measured by Google. Interesting. Right, we'll see where we are in a year's time.
One of those I'm least sure about is the US dollar.
Okay, that's interesting. So I
think these are very difficult markets. Inflation's sticky. I get that it's come off a little bit, but I think inflation's sticky. It's going to come back. It could come back. And I think as a result, you said bull market. I think all those things will be higher, but I think it's whipsaw-y, range trading action rather than out and out bull market.
Fine. So we're not going to see like a defined upward trend. We're going to see difficult, challenging, choppy markets.
Yeah, except I would say that.
What's the except? Or do you want
to? No, I think that's right.
Perfect. So then in terms of kind of bringing things, 2 more sort of final points before bringing things to a conclusion. So direction of travel. So what you're most focused upon now, what's most important to you, what you're thinking about now. Yeah, what you're working on, what you're interested in.
I'm trying to do more comedy stuff, but my Substack, I'm really enjoying my Substack and I'm very prolific on it, but it's just taking up all of my time.
Mm-hmm.
It's called theflyingfrisbee.com. It's my sort of newsletter. And I'm trying to do more comedy stuff and more comedy songs because I find that really fulfilling, but I keep getting swallowed up in Substack stuff. So unless I can find a way of not doing it, that's where I'm going to be. But my biggest single project I've got going is promoting this audio book musical thing, this podcast musical thing called Kisses on a Postcard, which is about my Dad's experiences as a Vaki in World War II, which I rewrote, and we redid some of the music for it. And it's by far and away the biggest and the best thing I've ever done. And I think it's absolutely stunning. And all your listeners and viewers should listen to it. KissesonaPostcard.com.
Very good. There you go. So look, I'm going to put the Substack in the show notes. I'll also put a link to Kisses on a Postcard, because was that originally written by your late father?
Yeah, he wrote it, and I adapted it. Me and my friend Martin wrote a lot of the songs for it, but it's basically his story that I adapted.
So I've obviously had the pleasure of listening to it. I listened to it, in that gap between Christmas Day and New Year's Day.
Okay.
Headphones on, lying on the sofa, gave it my full attention. It is a beautiful piece of work. And I'm frankly willing to admit that I'm a bit of a Philistine, so I'm not really that into musicals, for example. But I wouldn't let anybody be dissuaded from listening to it, because it is a beautiful piece of work. It is extraordinary, really extraordinary. So I'm sure it's available on other platforms. I happen to have listened to it on Spotify, and obviously all the tech obviously would work as you'd anticipate.
Yeah, Apple Podcasts and all of that, or you can buy CDs if you want. But yeah,
there are moments in it that I challenge anybody to remain with a dry eye. I challenge anybody to remain with a dry eye, and there are moments in it that I genuinely laugh out loud. One of the I'm not going to give it all away, but one of the characters literally just was like really made me laugh out loud. And I think the message,
character?
Unfortunately, I don't want to give away what happens to him, but the son of the Welsh couple.
Oh yeah, Gwyn. Yeah.
Oh God, like some of his stuff is absolutely hilarious. It certainly resonated with me. Kind of, yeah, very entertaining.
Oh, good. I'm glad. I wasn't expecting you to say him, so I'm glad you did.
Really, really entertaining, and obviously the the conclusion to it, and I think the message that comes towards the end is one that's really needed at this time. So I recommend anybody to seek it out, even if you're a bit of a Philistine like me and you've not listened to that many pieces of musical theatre in your lifetime. I would really recommend seeking it out. It's an excellent piece of work.
Well, thank you, Paul. And literally all I want in life is for Kisses on a well, maybe not all I want in life, but the biggest thing I want to happen is for as many people as possible to listen to Kisses on a Postcard. They will be rewarded for doing so, because it's just a beautiful story. But I just pray that Kisses on a Postcard becomes a thing, if that makes sense.
Definitely. And it is a part of our history, which I think is very much undertold. Yeah. I'm not embarrassed to admit that I did not know the whole story about, evacuees being relocated.
Nobody knows it.
And if you think about it,
biggest movement of people in our history, and nobody knows it.
And through the lens of today's world, sending your children hundreds of miles away, not knowing where they're going to be. I mean, as a parent, that is astonishing, isn't it? Anyway,
I just wonder what it did to our country. I don't know what the long-term effects of that were. I don't think anyone's even thought about it, but it messed up kids, and it messed up parents. It ruptured every family in every city in the country. And if you think of the importance of the family within the structure of society, I don't know what the consequences. It's just incredible.
So I highly recommend seeking out that piece of work. It is absolutely extraordinary. I'm also, Dominic, going to point people towards your Substack, obviously the Kisses and the Postcard link and what have you, and of course your YouTube channel as well. Did you want to say anything about the Pure Gold Company before we let you go?
No, you don't. I've got an affiliation deal with them, so if you want to buy physical gold, buy it from the Pure Gold Company and say I told you. But say I sent you. But the main thing, Kisses on a Postcard and the Substack. You don't need to worry about anything else.
Perfect.
Keep it simple.
There we go. Dominic, huge thanks for coming on the podcast. It's been an absolute pleasure. Really grateful for you coming on.
Thank you, Paul. I've really enjoyed myself. Thank you for inviting me.
Fantastic. So there you go, ladies and gentlemen. To discuss property investing, everything I've discussed with Dominic, do feel free to join me at Property Investor Breakfast. You subscribe to the podcast, connect with me on social media. Links are below. Keep well. Speak soon. Thanks very much for listening to the podcast.